Ever wondered why some people seem to effortlessly accumulate wealth while others struggle? This intriguing question may have crossed your mind at one point or another. The secret isn't necessarily a high-paying job or a big inheritance. It's something that anyone can harness, and it's called the power of compounding. Compounding, in the world of finance, is the process where the value of an investment increases because the earnings on an investment, both capital gains and interest, earn interest as time passes. This might seem a bit complex, but let's break it down with an example. Imagine two friends, let's call them Jack and Jill. Both are the same age. Jack starts investing just a small amount consistently from the age of 25, while Jill waits until she's 40. Even if Jill invests more money each year than Jack, Jack's total investment will far outpace Jill's by the time they both retire. This is all thanks to the power of compounding. The reason behind this magic is simple: time. The more time your money has to grow, the more it will compound and increase in value. In Jack's case, his money had more time to multiply, even though he was investing less than Jill. So you see, compounding isn't just about how much you invest, but also about when you start investing. The earlier you start, the more time your money has to grow. And the more it grows, the more it can compound, creating a virtuous cycle of increasing wealth. But remember, consistency is key. Regular and consistent investments will keep this compounding engine running smoothly. It's not about timing the market, but rather time in the market that counts. This is why compounding is often referred to as the eighth wonder of the world, and rightfully so. It's a powerful tool that can make a significant difference in your wealth accumulation journey. So, the earlier and smarter you invest, the more time you give your money to grow. And with the power of compounding on your side, who knows how far your wealth can reach? But what happens when we don't take advantage of this powerful financial tool and instead fall into bad money habits? Let's talk about some common financial pitfalls that many people fall into. Overspending, for instance, is an easy trap to get caught in. You see something you want, you buy it, and before you know it, your bank account is dwindling faster than you can say credit card debt. And that's just the tip of the iceberg. Failing to save is another bad money habit. Living for today is great, but when tomorrow comes and you've got no savings to fall back on, it's a different story. Picture this. It's a rainy day, you've got an unexpected expense, but your piggy bank is empty. Not a pleasant thought, is it? Then there's the habit of not investing. You might think that keeping your money under the mattress is safe, but in reality, you're missing out on the opportunity to grow your wealth. Imagine if you invested that money instead and watched it grow year after year. Now that's a thought worth entertaining. The consequences of these bad money habits, they're far from pretty. Overspending can lead to accumulating debt, and before you know it, you're in a hole so deep, it's hard to see the light of day. Not saving means you're living paycheck to paycheck, always one step away from financial disaster. And not investing means you're missing out on the opportunity to secure your financial future. No emergency funds, no retirement savings, just a whole lot of financial stress and uncertainty. According to a recent report, 78% of American workers live paycheck to paycheck. Another study found that only 40% of adults could cover a $400 emergency expense. These are stark reminders of the consequences of bad money habits. As you can see, bad money habits can lead to a cycle of financial instability and stress. But the good news is, it's never too late to start investing and break free from this cycle. So, you're ready to start investing and take advantage of compounding, but where should you put your money? Well, let's dive into the 8 best compounding assets to start investing in 2024. First on our list is stocks. Stocks represent ownership in a company. When you buy a stock, you're buying a piece of that company, and as the company grows, so does the value of your stock. It's like having a stake in the success of your favorite brands. While the stock market can be volatile over the long run, it has traditionally provided a good return on investment. Next up, we have bonds. Bonds are essentially loans you give to a company or government entity, and in return, they promise to pay you back with interest. Bonds are generally considered safer than stocks because you're guaranteed to get your money back unless the issuer defaults. They're a good choice if you're looking for steady income. Third, we have real estate. Buying property can be an excellent investment. especially if property values rise over time. Plus, if you rent out the property, you can earn additional income. Real estate can be a great way to diversify your portfolio and hedge against inflation. Mutual funds make the fourth spot on our list. These are pooled investment vehicles that combine money from many investors to purchase a diversified portfolio of stocks, bonds, or other assets. Mutual funds can be a good choice if you want diversification and professional management without the hassle of picking individual stocks or bonds. Fifth, there are exchange-traded funds, or ETFs. These are similar to mutual funds, but trade on an exchange like a stock. ETFs can be a good choice if you want the diversification of a mutual fund with the flexibility to buy and sell throughout the trading day. Next up, we have real estate investment trusts, or REITs. These are companies that own or finance income-producing real estate. When you invest in a REIT, you're investing in a portfolio of real estate assets. REITs can provide a steady income stream and the potential for capital appreciation. Seventh on our list are cryptocurrencies. Although they're a newer asset class and can be highly volatile, cryptocurrencies like Bitcoin and Ethereum have the potential for significant returns. Remember, though, that with high reward comes high risk, so invest wisely. Finally, we have high-yield savings accounts. While these won't make you a millionaire overnight, they can provide a safe place to store your money while earning a higher interest rate than a regular savings account. These are just a few of the many investment options available. The key is to diversify your portfolio and invest according to your financial goals and risk tolerance. Each of these assets can play a role in a well-balanced portfolio, offering various levels of risk and reward. Remember, the best investment strategy is one that aligns with your personal financial goals and risk tolerance. It's not about finding the best investment, but rather the best investment for you. So start investing and let the magic of compounding do its work. But before you start investing, there's one more thing you need to understand, and that's financial literacy. It's like attempting to fly a plane without a pilot's license. The consequences could be disastrous. Financial literacy, put simply, is understanding how money works. It's about knowing how to earn, spend, save, and invest money wisely. It's about comprehending the concepts of interest rates, compounding, risk diversification, and the time value of money. It's about being able to read financial statements, budget your income, and plan for retirement. Without financial literacy, the world of investing can be a treacherous landscape. You might fall prey to bad investment advice or worse, investment scams. You might take on excessive risk without understanding the potential fallout. You might misinterpret market trends and make decisions based on emotions rather than facts. Let's consider a scenario. You've heard of this hot new cryptocurrency that's expected to skyrocket in value. You're tempted to pour all your savings into it, hoping for a quick and hefty profit. But do you understand the volatility inherent in cryptocurrency markets? Are you aware of the potential for loss as much as gain? Do you know about blockchain technology, or is it just a buzzword to you? This is where financial literacy comes in. It empowers you to make informed decisions, to weigh the pros and cons, to understand the risks and rewards. It's also important to remember that financial literacy isn't a one-time thing, it's a lifelong journey. The financial world is constantly evolving, with new investment vehicles, new regulations, and new economic realities. Staying informed and up-to-date is a crucial part of being a savvy investor. The good news is that financial literacy is within everyone's reach. There are countless resources available, from books and online courses to podcasts and blogs. There's no excuse not to educate yourself. Remember, the most powerful investment you can make is in your knowledge. So, equip yourself with the right information, make smart investment decisions, and watch your wealth grow over time.